Welcome back to Squawk Box. Exxon could play spoiler in Chevron's deal to buy Hess. Last October, Chevron proposed buying Hess for $53 billion, largely to obtain a 30% stake in that Hess holds in a giant project in Guyana. Now, Chevron is warning investors that the deal could be in jeopardy. At issue, Exxon claims it should have the right of first refusal to a deal with Hess because Hess owns 45% of that joint venture in Guyana. Joining us right now with his take on how this all plays out is Neal Dingmann. He's the energy research analyst at Truist Securities. Good morning to you. A little bit of a wrinkle, or I should say a big twist maybe, but a twist that you would have imagined the players all would have known about, Neal.
Yes, good morning, Andrew. Thanks for having me. You're exactly right. It's very difficult to make a call today of whether Chevron or Exxon is going to prevail. Just as you said, the terms of the JOA, which, by the way, was signed about a decade ago, the terms were not clear. I don't think whether the preemptive rights exist. So, again, to make a call today is going to be, very difficult. And, again, to see which one is Exxon's going to have any leg to stand on, as you said here.
So, but Neal, here's my question. Was this JV and the terms of the JV widely understood by the investing public? Was it widely understood inside these companies? Did the lawyers miss it, or did the lawyers say, well, it seems a little fuzzy, let's just play this out and see how far we can gut?
I think what it sounded like, what was listed yesterday, is that, of course, Chevron and thus Hess said it seemed like it was very clear, the terms of the JOA, at least the way that they have read it. And I guess the part that I found a little bit odd is that the timing that lapsed between, when this was initially announced and now Exxon and CNOOC making a call that there is parts of whether these preemptive rights were exactly as Chevron and, had read those. So the timing to be is a little bit ambiguous and just shows me, again, the problem of doing a deal like this versus these other pure domestic for domestic deals we've seen.
Okay, so now you got to get into the business of handicapping whether this deal, at least in its current form, happens. And if it doesn't happen, what happens after that?
Yes, again, I still think there's a very, very high chance that Chevron ends up with this and it goes through as it should. But for me, for some reason, if they deem that JOA doesn't hold up for these preemptive rights, at that point, I think, look, that they're not going to let Exxon and CNOOC buy it. I think at that point, Hess would say, look, we will take it back. We will then continue as a standalone company. Again, I don't cover Hess, so to see how that stock will continue to progress would be interesting. But I don't think that Exxon and CNOOC will end up with it. I think either the transaction will go through or Hess will take that back.
Is there dare I say, a payoff that can happen? Meaning, could Exxon extract some form of payment for all of this?
Well, I think absolutely. I think, to your point, we know that, Chevron has a 30%. There's X amount of oil barrels in the ground. I think we deemed they're on to the fourth leg of this massive play. And I think there is going to be a number in mind that, look, Exxon or CNOOC would say, okay, what will it take for us to take this 30% and roll it up to the two of them? So I think you're absolutely right. There is, I'm sure, some wiggle room here. But again, I still think that I can't imagine that Chevron lawyers would have gone down this road had they thought there was any issue of these preemptive rights converting over.
Right.